Hello everyone and welcome to lesson 2 of the free cryptocurrency course. In this lesson we'll be going over trends and what I like to call trendception, which is essentially based off the film Inception, where we find trends within trends and just overall understanding how trends work, understanding how to identify trending markets, and then using this to combine this with the prior lesson, lesson 1 of support and resistance, because many people think just because there's key levels of support and resistance they will work. However, if you do not understand the overall trend of the market, just as we covered in the last lesson with bullish candles and bearish candles, obviously being buying and selling, the same applies for trends. A bullish trend is obviously a bullish upwards moving market. A bearish trend is a bearish downwards moving market where a lot of selling pressure is being applied, whereas bullish is where a lot of buying pressure is being applied. Now, before we even get into, many people want to know, how to set up the charts on TradingView, for example, because the platform we're using for charting analysis is TradingView. As you can see here, BTC course, got my name there. This is the TradingView platform. So if you did not know this already, this is the best platform to use for charting software and just to set up all your charts and stuff. But before we get into all the ways of setting up TradingView, etc., I feel like you need to understand the basics first. And if you go onto TradingView and you can start to understand what I'm teaching you here, as we progress through each and every lesson, it doesn't matter too much right now how your TradingView is set up. As long as you've got it set up, you've got your account logged in, you've got the BTC charts open. For example, you can go here. I've got the Bitstamp BTC USD chart for this one. You can type in whatever you want. If you're doing Forex, you've got all of the different brokers and liquidity providers over here for that particular pair, which is why some prices can differentiate. So a good example would be, you've got the Bitstamp chart here, where the current price is $17,767. But if you go to the Bitfinex chart as an example, you can see it's slightly different. It's $17,758 right now. So it doesn't really matter too much. And as we get further on throughout this course, I'll start to show you why there's a benefit to potentially using both at the same time. But for now, we'll go straight back to trends. And I'm going to start to show you how to identify the trends from the long term down to potential intraday trends as well, and how this can combine with your support and resistance to get full control of the market. Because once you've got the trend and you've got your key levels, the support and resistance from top-down analysis, your trading basically has an entire structure. And now you have I guess you could say, an infrastructure in place, just like the first lesson on how to work and where to work from. What you've basically configured the entire structure. Now you can trade between those levels and you can understand more clearly where the market is going next. Now, I think BTC being at where it is right now is a great example of trends. And first of all, given a little psychological lesson on trends as well. Now, during these moments in time where the market is incredibly bullish, people often forget, and this is a very important factor when it comes to trends, the trend end at some point. Even if we're in a multi-year bullish market and BTC, for example, goes up to $100,000 or $1 million, just a random number as an example, people often forget that throughout the process of a trending market, you will see corrections, you will see waves. The same way in 2017, where everyone got so excited because we were just going up month after month after month, they often forget the market will first come back down to correct and test the waters of where it broke out from, and then continue higher progressively. So a good example of this will be just from the offset. BTC, let's just say where we are now, you can start to expect processes like this. This is just random numbers, do not actually pay attention to where I'm placing them, but it's more of an example to show you how markets move when they're trending upwards. And obviously the overall trend on BTC from a monthly perspective, as we can see, is progressively moving higher. So we can start to anticipate at some point there is going to be a pullback, no matter how small or how large. Remember, on the monthly time frame, this looks like a very small pullback. Let's just say it's $10,000. However, that is almost an $8,000 move to the downside. So we always want to start off identifying trends from the monthly, because once you've gathered how the monthly chart is moving and what overall longer term trend we're in, you can start to then go from the medium term to the short term trend as well. So we'll be using this for BTC right now. The most important thing when it comes to trends is understanding higher highs and higher lows. that being the swing highs and the swing lows over here, and looking at where the market is currently progressing. So the first thing we want to do for BTC is just marking out points of where the market really swung from. So that was one of the last spikes on the monthly chart for a swing low before we rocketed higher. Now, if we go to the next bear market correction where we landed over here. We then came down again and landed over here before spiking higher. Now, the first thing you can see from this is that every time we have gone lower, gone higher, and then come back down, the low has got higher than the previous low. That is what we call a higher low. So the more you see higher lows forming, the more we know the market is continuing upwards, because every time it does come down, it's not breaking the overall trend. You can see there is a nice curvature here. We are progressively going higher. So from an arrow or even a trend line perspective, if I was to place a trend line down using the arrow as a trend line, you can see we are progressively going higher and higher and higher. So we can expect now in the future, if we were to see some kind of pullback, we may potentially come all the way back down, and it still wouldn't mean the market is going to, you know, drop down to $100 or zero. It just means from an overall longer term perspective, the market can start correcting and building up to prepare itself for the next move higher. When it comes to cryptocurrencies, these moves are obviously huge, which means what can look like an incredibly large dump when we saw from 2017, December, from $20,000 all the way down to $3,000, many people thought this was the end of crypto. However, that quickly turned around, we progressed higher again, and now we've gone almost all the way back to all-time highs. So it's always good to understand psychologically that when the going gets good for too long, it inevitably has to come back down at some point to test the waters. And as we progress further throughout the course, I'll be showing you about breakouts from trends. I'll be showing you all kinds of different things to really help piece together the puzzle. But for now, we have to start from the very basics. And as each lesson goes on, it will all make much, much more sense. So as of now, I would say overall from a long-term perspective, BTC is very clearly bullish. If you go to anything really over here, you can see from a longer term perspective on XRP as well. We'll get rid of the Fibonacci for now. Again, I'm personally expecting everything to start dropping. I made one of my purchases here recently in March. This is the line to represent. So this is up pretty much almost 100% return on investment now. That was a very good buy, because I understood when we came all the way back down but didn't actually break below this low, it was just a further confirmation that the market was going to potentially pull back up, correct, and start breaking out. So as you can see here as well on XRP, which is a great example, when you go to the monthly chart, we went all the way to around $3.3, starting off from around here. On this particular chart, some charts go a bit further back. However, you can see overall we had a huge spike up, and then we've been pretty much bearish the entire time. However, the most important thing to take note of from this is we did not break below that low right there. So as we've come all the way back down to correct now, whilst we did see a little spike lower, we have maintained this floor over here incredibly well, which means the floor has maintained. The market is now starting to break out once again of its bearish trend. And as you can see now, if I go to the weekly, we're starting to slowly but surely progress higher. So we've got a good key indicator here that the market could potentially be turning around now. We now need to monitor to see if there's going to be any corrections to the downside. And then we have further confirmation. If we do not break lower than this level here, which is very unlikely anyway, we will be seeing a large potential move upwards. So going back to BTC, we can see here right now the overall trend is pretty bullish, if you ask me. From a monthly perspective, we're going up, we're going down, we're going up, we're going down, but we're progressively getting higher. So we can understand the market is moving pretty swiftly to the upside. Now, going over to the weekly, once you've understood the overall trend is bullish, you need to start identifying as you drop lower, is this trend going to sustain? Where is this trend potentially going to turn around? We have an all-time high posted around this level here, which we will use as a faint level because around $18,900 to $19,000, the candle bodies on the weekly close at this level. And from the monthly perspective, they obviously closed back at $14,000. So there's many different levels here. And there's many different things going on. And it would be interesting to see as well how you can confirm a bullish trend continuation, or how you can confirm whether the market is going to turn around. So as of now, a key turning point to take note of is not only the all-time high around here. This is the first way we'll do this. You have the all-time high wick at around 19,600 on this particular chart, but the candle bodies are here. So sometimes, as I've mentioned in the prior lesson, wicks often play tricks. So just because you have broken below the candle body, but you remain within the wick region, and we'll be covering this in the wick lesson as well, it doesn't necessarily mean the bullish trend has been confirmed just yet. It's more about breaking the overall wick overall that really makes the largest difference. Now, as of now, you can see very clearly we've broken above the prior high here. Not the all-time high, but the prior high. So we've been progressively moving higher. But we have 11 days till the monthly candle closes, so things can change very quickly in crypto. And this is why patience is always crucial. So as of now, we know there's currently a bullish trend, but there's no confirmation that we'll break out of all-time highs unless we start seeing candles close above this region. So going back to the weekly time frame now, if we just correct this a little bit more down to where the weekly candle is, again, this is the same way you do the level placements like I told you prior. If you adjust this a little bit lower, you can see it now correlates with prior candle bodies over there as well. So if we go to the weekly, we can identify, bearing in mind this is a long-term trend, if we were at this moment in time, we have very clear proof and very clear signs we were turning into a bearish market. Every single lower high, again, this is a high, this is a low. Any swing low is where the market turns around from. This is obviously a support level, and any swing high is where the market swings up to and reverses down from. So if we were to plot this here, we then plot this here, and we then start plotting these down here. Here's where things get a bit interesting, because you'll very clearly be able to see where a potential turning point in the market has now been formed. Plot that there, and we'll do one more swing low here. So as we can see very clearly, the market is descending, the market is moving lower. Every single wick you see is slowly but surely going downwards. So until the last swing high is actually broken or invalidated, there is no confirmation of an upside swing. But as you can see over here, just as I said, we did finally break above. The candle bodies did not necessarily close above this wick, but we did see a very large spike higher, and the candle bodies did close above the prior candle bodies as well. So we started to see, if we combine this with what was taught in the prior lesson, the support level that was once here then became resistance, and then we finally broke above. This is that same analogy or idea of the bulls versus bears, and also the game of tug of war, my apologies. Once you break above this level, it's confirmation that the wall may no longer be as valid as it once was, especially from a higher time frame perspective. This is a very significant breakout from a higher time frame perspective. So when you see it go all the way back down, it's simply fulfilling the last move of the bearish trend before it gears up to potentially tackle this area once again. And the same way I covered in the prior lesson, if we zoom in ever so slightly, you can see how once we go to the daily time frame, from this level here, once we started getting to this final spike down, which also correlates with this downside movement, I'll show you that in a minute as well, trend wise, you can see now how the wall starts pushing higher and higher again. We've already broken this level. So once you get to that squeezing point after prior breaking it already, you can see as we get closer and closer to the lows forming near that trend line or near the crucial level of support and resistance, we finally broke out, and we saw that confirmation there. So it's the exact same game of tug of war, breaking, pushing, 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 we finally break above. So that's the easiest way to identify from a longer term perspective what's going on. And as you can see within this trend here that's going downwards, can you see how these up and down swings, when you break it down to the daily time frame, these are miniature trends within a trend. So if we now clear all of this once again, all we would do is use something like a line tool or the parallel channel, which I'll get up over here. Let's draw a trend line first to see how that correlates. Again, if you draw it like this on Forex, this is a crucial lesson of trendline application as well. When it comes to cryptocurrencies, it doesn't always work like Forex. You have to be very volatile and versatile as well. You have to adapt with the market. If you just plot a simple wick to wick trend line, you would have thought the trend was over already and we were going to break out. you have to see over time how to draw this, and you have to start drawing this down here. So a lot of the time when it comes to trend line application on cryptocurrency, you are allowed to break through the wicks. You start it from the very top, the highest high of that particular trend, before we start descending. So once you've, well, the easiest way to spot a trend, first of all, is once a high has been formed or a major low has been formed, and then we see a reversal from that point, and then we see a pullback, you can start to then understand a trend or a new trend may potentially be forming. So once we've seen this wick up here, then we saw a pullback, then we saw a spike up again lower, and we started dropping, we have confirmation a trend was in play. So before any of this price action would have formed, we obviously would have first had this maybe here, expecting the trend to maintain. Now, if you just zoom in a little bit more, you can see here at first this would have made pretty good sense. We saw a spike through, the candle bodies remained pretty much in line with this trend line. You can also refine that a little bit more just to make it a bit clearer. And you can see we fitted in quite nicely with that trend. However, as time went on, we broke through, we retested, so we must adapt. Because this did not actually break the prior high over here, we are still remaining in a bearish trend. So all we do is we adjust our trend line over time to counter for the ever-changing market dynamics. Over here, the wick is the high, and as you can see here, we've gone from the wick to the candle bodies. So we haven't gone from wick to wick, which still technically would have been valid. However, when you draw it from here, you can see much more precision. And also you can see how the candle bodies are respecting ever so more when you do it from this method. And then when you did see a breakout, you have a much larger confirmation that the market is actually breaking out from the trend. Whereas if you put it from wick to wick, it would have been too late. And this significant candle here, going from $7,300, pushing all the way up to $8,400, that still wouldn't have been a real confirmation for you. But if you're drawing it from where the candles are actually creating the trend, you can see much more clearly a breakout would have been identified from the bottom versus from the top instead. So that's one thing you should always pay attention to when it comes to trend line application. But also, if we just copy and paste this and then we will alter this, copy and pasting on Mac is obviously just using the control button or command and pasting CMV. So you can see here, if you duplicated the trend, there was a channel, however, it wasn't respecting. So again, the same process of trend line application that you would use on Forex, which I'm sure Bernie will be teaching you throughout the lessons, will not always work perfectly, which means sometimes you need to adapt to your situation. Which means in this scenario, we would potentially draw it from the very low of the wick that formed the high, and then we would simply move this upwards to accommodate a move in line with the current price action. But you can see even then it's not working. So at the current time, that would have been perfect once you've plotted this one. However, what you need to do is start being a bit more versatile once again and adapting this even more. So what you would do is you would push that from there to there, where the wick is or where most wicks are forming. Once this low is formed, you can then easily and clearly move your trend line to adjust for this. So if you first had it here and it didn't meet and it formed a low there, all you do is simply adjust the trend line at this point in time to now line up the two dots. So you can see roughly, if you lined up this wick with this low, let's just make this as precise as possible, around there, pushing it to that low there, you would have seen now you've got 1, 2, 3 tests of a trend line. So we very clearly have a rough but a working trend line in play. And you can also do the same by pushing this upwards. Even if you pierce the wicks ever so slightly, you can see how much more clearer the lower spectrum of this trend is forming. So if we turn the opacity up nice and strong, we'll turn the opacity up for this one as well. You can see now, although it's not perfect, it's almost forming a wedge, downward ascending wedge. And eventually, once you get to a breakout point of this wedge, it came back down, it tested the trend line again for validation and confirmation, and we finally broke out of this trend, breaking the prior high, breaking the prior high, breaking the prior high, and progressing higher. So that is one of the easiest ways to identify trends in the market. This goes for the bullish trends as well. The same will always apply. Right now, we are incredibly bullish, but once we potentially come back down, if we do come back down, then we know what's going on next. But you need to also identify support and resistance within the trends as well. So we're going to get through all of this very shortly. So we understand, using this real life example right now, that the market itself is bullish. Therefore, when we go to the weekly, we start to plot the highs and lows. So we have the low again, or if you want, we can make this even easier. We can do higher high or just a low for now. This is the first low. that's been made. Now from here, we have a higher high. There, doesn't really matter too much. We'll just say from there, because this was the real turning point, anywhere around this region, we can then duplicate this. It's not working. Higher low. So we'll now make a higher low. That will be around here where the market swung higher. If we then drop this here, we have another higher low. So we're progressively getting higher and higher and higher. We then have a new higher high. We now have a current new higher high. We don't know how this will end yet. It could potentially end around here. So we'll simply just leave that there for now. Now, once you get to the daily, you can start to break this down even further. So we understand the overall trend is bullish, and we'll just use something as simple as a parallel channel for this now, which you can access over here in your toolbar. Let me go back and just show you how to do this. Go over to here underneath where the crosshair is, go to the bottom and go to parallel channel. You can either use 2 trend lines and just copy and paste them, or you can just save yourself a serious amount of time and just do something like this and then plot this open here. You can see once you drag this down to the candle body, approximately from where we are right now, you can see there's a nice trend forming. We've technically broken out, but will it come back down? We do not know yet. So also what you can do as well, you can adjust this even more to accommodate for the current price action. You could even plot it like this, from where the wicks are touching most frequently. And then from here, you can adjust this up and down to see if it goes in line with what's been covered. So if you put this pretty much from the first real wick over there, you can see it starts to correlate very nicely with the overall trend that's being formed. So if we drag this a bit lower, just a little bit lower to the candle bodies, it still fits in with the overall trend. And you can see there's been a breakout, we've retested, and now we've pushed higher. So the trend is still ongoing. But once you get to the daily time frame, you can see and break this down even clearer. The same way you do top-down analysis with the support and resistance, and you start to see how those levels are respected much more clearly on the lower time frames. The same can be exactly the same here. So now we can refine this a bit more and see how we're currently moving in line with this trend. So let's just adjust this even more now to the very low of this trend. Plot that over there where there's some nice wicks, higher highs, higher lows. But can you now see, once you're on the daily, you can start to identify key trading points within this overall channel. This is known as a channel. It's the easiest way to trade this. And this was technically a fake breakout. If you push this a bit lower to the first wick around here, can you see how the wick was respected? We saw a fake breakout. We came back down, we tested again, and we've tested many times before. And then when we broke out, we retested, we started breaking higher. So this is the easiest way to identify trends in the market. But then within, this is where the trendception begins to come into play. Within those trends, we'll make this a completely different color for the sake of trend identification. Can you see within these individual trends, there are other trends forming? We will draw that from, let's just say from here, draw that down to there. We can do pretty much the exact same for this over here. We can then do the exact same for this over here. The exact same over here. And again, if you start extending these out over time, you're giving yourself potential levels where the market can come back down and retest and move in line with the overall trend. Now, right now, we have a current trend here forming. This is not too clean, to be honest. This is another trend in itself there. But what we want to be doing in this scenario, you obviously have to use common sense when applying trend line application as well. If you can see the overall market is just pushing higher all the way up here, if you draw a trend like this, you can see it's going to respect, but it's not necessarily respecting perfectly. Granted, if you push it a bit higher, it does break through and retest in line with the overall green trend, but it doesn't make too much sense. So what you want to be doing in these scenarios is doing the most logical thing and trying to align this trend as much as possible to what's currently going on in the market. So even that in itself is a little bit messy. So what you would be doing is, although it did respect, as you can see, it has now broken through again. So we've got all kinds of different confluences going on here. If I just push that a bit higher, that is still an upwards trend, but then you can go even higher now and plot it over here instead. So if you plotted it from there and then we refine this later, you can see right now we are currently at the top of this channel. So when you see there's a potential breakout, even if the market does not go the whole way down and break this trend, we're now giving ourselves a clear target of a potential reversal coming in from the market, because as you can see, every time it hits one of the crucial points of the channel, it starts to see some form of pullback. Again, touched here, reversed, touched here, reversed. When it broke through, it started pushing higher, and every time it touches the top of that channel, it pushes down. Hit the bottom of the channel, it pushed higher. It then hit the main channel and it dropped lower. Now it's retested the channel once again, drawing it from this end to this end. You can see once you've corresponded that quite nicely, it's touched the channel, it's come back again. Now it's come back down to the main channel and it started breaking higher. So what you can do in this instance, not necessarily to get into the trading aspect straight away, but you can start to identify how this could potentially now come back down at the very least towards around $17,000 before potentially going higher. However, this is how you identify changes in trends as well. If it breaks below this trend, it will likely come back and retest it, something I'll be covering in a lot of depth very soon, and then it could potentially go back down to the next trend line. So I would never recommend actually having your charts this messy, of course, but this is one clear way to identify trendception and to identify crucial trading opportunities. From a weekly perspective, again, this is absolute insanity. It's too messy. You never want your charts to be like this. But one thing you can always do is set this up beforehand just to start identifying and getting in swing with the market. Because once you understand the trend is your friend, life becomes 100 times easier. So we've identified this trend, and overall, as you can see, no matter whether we're going up or down, price is fulfilling the overall green longer term trend. So this is exactly how trendception works. If we now go down to the 4-hour time frame, we see again there's even more trends within a trend. Now I know this is going to get very messy chart wise, and I'm not going to keep it this way. This is purely for educational purposes to show you how there are so many different trends within a market. We could go down to the 15-minute chart and it would probably do exactly the same as well, no matter what time frame you're working on. Let's see where we are in time right now. Let's go back. It's going to go everywhere now. Even from a 15-minute perspective, there are trends within a trend. So just another purely random example before we go back to the higher time frames. Let's just make this purple just to easily identify. There are little trends within the trend as well. So these are the downwards trends. They are tiny trends. And when you're working from an intraday perspective, you can understand every little swing high and low that forms in with the bigger picture is essentially a trend within itself. The market is either range bound or it's trending upwards or downwards. So you have the bullish market, you have the bearish market, and then you have a range bound market. So if I go to a higher time frame very quickly, let's get rid of this. A range bound market, if you go to, let's just say, the monthly, you can see a range bound market which would have lasted from around May 2018 to around November 2018. This is what's known as a range bound market because the market is within a range. It is not going really up or down. It's just bouncing between a confined box and an area where price is clearly struggling to break out from. So if you went to the weekly now, over to here, you would be able to identify the market is clearly, although in the longer term trend, it's going downwards, it then goes into a miniature trend, which is then range bound. And you can do this you can confine it this way, you can do it all the way from the very top. But overall, you can see progressively it's going down, but then it breaks into miniature trends within this as well. So there's so many ways you can do this, but this is purely for educational purposes. Now, if we go to the 4-hour, and we start to look at all of these trends that are forming, going to the very beginning, you can see now within that channel that I've just showed you, within the other channel, the trendception, you start to see how this all comes into play. The fake breakout, it comes back down and tests, it breaks through again. If we then plot this over here, you can see there's another channel forming there. It's all channels within channels, and this is pretty much how the market works. You could draw it this way, plot it up to there, because then when you do it this way and you extend this out a little bit more, if I just plot that there, maybe refine this a bit more as well, actually, from around there to there. Again, it's all about understanding how the market works as well, and it does take a bit of practice to identify the trends, but the more you practice this and the more you start to get confirmation over time, you can see how the trends really go in depth and start breaking out and confirming exactly what's happening. So a good example would be, you've identified the overall long-term trend, and this will be a lot easier once you get to price action over here. But as you can see, this trend is bullish. The overall trend and phase we're currently in is bullish. So when you start breaking down into the lower time frames, you start to look for buys that are moving in line with the trend. You never really want to be going against the trend too much. It's something I do every now and then if I can spot a potential major market reversal. But if you want frequent, consistent trades, it's in your best interest to move in line with the overall trend. And that's why identifying it from the monthly is crucial, because we know it's bullish. We go to the weekly, we can confirm it's bullish, we can see some action within there that's also bullish as well. So we have a full confirmation that buys are ideally the best thing to be doing right now. If you go to the daily time frame now, all you're doing is you're trying to find buying opportunities within this trend. So when you go to the 4 hour, you've now really gone in depth on this trend and you're breaking down what is going on an intraday basis and an intraday basis. So as you can see here, this channel, once it broke out of this channel, it came back and retested it. Remember, this is also support and resistance. It doesn't just have to be horizontal lines, support and resistance. It can also be the channel itself. And this is why trend lines are a very crucial part of trading. And when we get into the trend line application lesson, moving on in the future, maybe even in the next lesson, I will show you guys how to then utilize these opportunities to start catching breakouts and all kinds of different things as well. But a very clear example here is resistance, support, support, support. It was acting perfectly. And when it finally broke out of that resistance level and came back, it retested it as support. Remember, resistance, support. If a level is below the current price, it is a support level. If it is above the current price, it is a resistance level. It broke above, it retested it, and boom. This alone, using the long position tool, just as a pure example, let's just say you were catching a very small trade from here to there. That alone would have been a beautiful trade that would have brought you around 4% profit with a simple 1% risk. Just because you've identified the overall momentum as bullish, but you've also captured a nice key level to trade from. But again, getting into that trading side is something that comes a lot later on down the line. So just continuing this, just to really get you used to what's going on in the market right now. Another trend. 1, 2, 3, 4. Also from the upside, 1, 2, 3, 4. It touches, it reverses. It can almost be as simple as that when it comes to identifying trades. If we plot this over here, this may need to actually be done from this perspective around there, or even from there. We then adjust this. We can see the multiple confluences. You push this a bit higher. First of all, it would have been from there, and that can still count, to be fair, because it was a false breakout. But if you push this a bit higher, once the new one has been formed, again, this is where the versatility comes in and adapting to your surroundings. In the very beginning, you likely would have had your trend line here because this is where the high was. But when we see a breakout higher, we adjust, we adapt, we move this a bit higher for the candle bodies, for example. You can see another perfect retest. So when it came to this point in time, you would have been able to capture a very good short opportunity. And then how would you have known it would have reversed from here? Because when you go to the daily, you can see it would have tapped exactly on the blue trend line. So by having channels or trend lines in place, you can understand that when the main intraday trends start coming out of play or they get broken out of, price starts abiding by the main new overall trend. So going to the 4 hour once again. We've broken through, we've come back down, we've tested the second trend line, the intermediate trend line, and then the shorter term trend line is then broken. If we go over here, you can see we can literally do this all day long. So we don't want to go too much into depth on this, but there are so many channels within the market. Put it from there maybe. Push it a bit higher to the candle bodies. Push this a bit lower where the wick was. 1, 2, or many wicks going through as well, and 3. So this is also a good way to understand that the wicks do play tricks, because as you can see, even on the 4 hour perspective, the wicks pierced through, but the candle bodies remained within this channel. So that's further confirmation that price right now may potentially be reversing, because if the candle bodies have not broken through, the wicks are simply fishing below to trick people that a breakout may be coming. But once the candle body closes, we have full confirmation that we are still within this trend. So we can follow this until the bearish or bullish candle breaks through. And in this instance, we finally broke out. Price then rocketed towards the overall longer term green trend line over here. So that is pretty much the basics of trendception, and identifying the trends is a very important thing to do. So a good example is in this current movement right now. So as you may remember, in the prior lesson, we covered the $7,200 level as well. $7,200 was the prior swing high on BTC, which caused a very drastic movement. It was this level over here. Now, as we can see, combining this now with the overall trend, we can see the trend is bullish. However, we have 3 days till the weekly candle closes. This is one of the prior swing highs, essentially, as well. We've broken out from all of these. Now we need to know what the market is going to do next. If we start seeing weekly candle closures below this level, it could also be an indicator the trend may reverse. So you're combining your trend lines and your channels with the support and resistance levels. So what we'll do now to pretty much summarize this overall lesson is it's very basic and it takes a lot of practice. However, it's not something that you can simply identify, and as you practice this more and more over time, you're going to find it incredibly easy to start identifying channels. So if we go back to the parallel channel and just plot this out over here, then plot that from maybe there, can you see how it has been respected? We have actually been following a very nice channel. We'll set this to blue to reflect our current intermediate trend. You can see here, we've had 2 candles over here, 1, 2, 3. We've come back and we've respected this perfectly. However, the weekly has broken above. Now, what this means is in 3 days, if we do see the candle close above this level, and we see the candle close above the trend in the channel we're currently in, we have a pretty strong confirmation. We could potentially come back down, retest this channel, and then start pinging off higher. However, if we start closing back below from this weekly channel, things can change very drastically and price could then come all the way back down towards the channel, the other end of the channel, the support spectrum of the channel. So this is how you start paying attention to things. And if you go to the daily now, you can see with a bit of refining, once again, the channel is working pretty smooth. I wouldn't say it's necessarily not working. It's working very nicely. We saw the pullback. We came back down. We've broken through falsely. We came back and we retested. But this is where what I taught you in the prior lesson comes into play. This will be the zone. We have a level of resistance there. Plot this up to the wicks. You can see the crucial area of resistance was then broken. We also broke the trend line. So any pullbacks would confirm it would likely come back down to retest this crucial level of support, which has now become resistance, and then boom, we've absolutely rocketed to the upside. So the more we get into this channel over here as well, we can start to identify now from the 4 hour, again, exactly as I covered in the prior lesson, we're moving upwards, we're trending nicely, and every time, why is this not grabbing? Maybe because the trend is in the back, the channel. It doesn't matter, but either way you can see, if I just do it this way instead, that every time we are pushing higher, we are getting closer to not only breaking out of the channel, but we are also getting closer to breaking out of the resistance level over here as well. So once the bears pushed the bulls down, and then they came back again and they pierced this level, you can see we're progressively getting higher. So we came back down, we wicked lower, we started reversing. It was a clear indicator that the trend would likely be broken alongside the resistance level being broken as well. So when it's come back down, let's make this a different color just so you can see. You've now got confirmation the trend is continuing, because not only are we piercing levels of resistance and turning them into support, the trend is being broken at the same time. Now this was an interesting time because we perfectly held that channel over there on the resistance end. However, the wick then pierced through. So we knew immediately once this was broken, we were likely going to see a continued upside movement. And this is pretty much how trends work. So when it comes to the 1 hour time frame, we will now draw this over here. Here's where things get interesting, because for the first time in a very long time, besides over here, we have pierced the peak of the channel. However, we are now starting to pull lower. So this is where things can get very interesting. And this is why I believe we could be seeing quite an interesting move on BTC, potentially to the downside, because right now we've broken this trend and this channel. We had a fake breakout higher. This is what's known as wick fishing. Wicks play tricks, as you can see over here. From a 4 hour perspective, we haven't actually technically broken the channel yet. This was just a false move on the 1 hour time frame. And when we've come back down, we've respected this now. We've broken through this technically. We can also alter this in any way possible. But overall, using this in correlation with what we're seeing here right now, a little push higher, you can see we've now broken the trend. So if we go to the 1 hour time frame now, what we could be expecting is a retest of this channel before potentially continuing lower. Because if you start to break this trend down now from this side, that was very badly drawn, my apologies, but it actually came through pretty solid. We can do it this way or we can do it this way, but right now I see a lot of respect coming in from this end of the channel. So if we draw this down here, change the color of this to green, we can see we are now going into a bearish channel after breaking the overall longer term trend. So what could be coming up here now is we retest this end of the channel. If we draw this a bit higher to there, we can now see this correlates perfectly with this region here. So we will not only be retesting the broken trend, but we would also be retesting the upper spectrum of the current bearish channel we're in. So a lot of things could be going on right now that could indicate BTC would potentially go a lot lower. Again, using the basic support and resistance theories as well, we haven't really retested a lot of these resistance levels that have been broken. This level here was broken. However, we haven't, that was a very bad drawing, we haven't actually come back down and touched this level yet. So this is at $16,350. We haven't come back down to test this level yet. And if we start breaking below this level here, we have further confirmation of a bearish channel that would be changing over. So scrapping all of this off again, this is the last real low that's been formed before rocketing higher. So this area here is absolutely crucial because we covered this in the prior lesson and what we just covered earlier as well. After breaking below this level, this was clear confirmation of the bullish channel rising. So what we'll do is we'll do higher low again. Higher low, another higher low, and another higher low. Now this was the last real higher low. Technically you could consider one of these areas a higher low as well. However, we haven't had enough price action yet, so you cannot really confirm a higher low until you start seeing a movement upwards, because for all we know now, if price was to drop all the way down here, then this would no longer be a higher low. So we need to wait to see if it breaks the current high. There is no real higher low until we see that break of the high. So if we copy and paste this, we'll now call this a higher high again. We will plot this here, higher high, we have confirmation. Technically, in a way, this is also a little higher high. That could be a higher low. I guess essentially you could consider that a higher low as well. It is very small, however, it does correlate with the overall trend. We do a higher high. So there is now no confirmation of the trend continuing higher until this level is broken and we see candle bodies above. However, we have two higher lows here. Let's just plot this out here. I know it's not accurate, it hasn't necessarily touched yet. We'll put that there. So we've got a higher low here. So if we start breaking below this level here, that's potential confirmation of an extra move lower, but the real higher low is from this region here. So unless we break this level here, we then have confirmation the trend is officially invalidated. And you can also do that by just drawing a simple trend line. So if you start breaking below this level and this trend and channel is broken, the confirmation is the trend is going to continue. However, if we maintain within this region over here and we do not start breaking below this level, we still have confirmation the market can simply go down to this trend line, which would then correlate with a new higher low. Even if the wick goes a bit lower, it doesn't matter too much. But if the candle bodies remain above this level, then we are in a new higher low, which would then mean we can anticipate a new higher high, which would eventually form over there maybe. Just as a random example, the last all-time high is around $20,000. So it wouldn't be a long shot to presume the next higher high would go towards the $20,000 region. That's pretty much how the market works. It's the last real level of resistance the crypto market has for BTC. So it makes perfect and logical sense to estimate and predict and project. That's where the market would be going. But from a 1 hour perspective now, things are not necessarily looking that way because we're in a channel. You can see the arrow there. If we plot this channel out, draw this out once more, plot this down there. It was that way, wasn't it? Yep. So now we can see roughly from where we are right now with this current channel, this could end up leading us all the way down to this channel. We could catch many bearish opportunities on the way down. And then from here, you start to evaluate. It's come to a longer term trend line. Although the miniature intraday 1 hour time frame channel is going bearish, it's now starting to correlate with the overall longer term trend. So if it maintains this level, we know we're likely going to break above this and start going higher. This is where you combine again all of the support and resistance levels. You can plot this as a resistance level as well. I know this chart is very messy. It's not what I would normally do, but this is more to give you an idea of how to visualize the markets. One thing I think is very important psychologically is we all have access to the same charts. I think many people forget this. We all have access to the same charts. We are all looking at the exact same thing, but everyone is doing 100,000 different things. No one is looking at the exact same thing. Even though everything is there exactly the same, we are viewing these in a different manner. So when you can learn to view these in the correct manner and start to understand what the market is actually doing, because without all of this, if we just get rid of the drawing here, you can see very clearly it's a bit harder. Even though the market's trending, it's hard to actually understand clearly where it may be going next if you do not have these markings on your chart first. So what I always like to do, especially if I've been away from the charts for a very long time, is to kind of go all in and really just plot every single thing that's indicating what the market's doing right now. And then once you've gathered the bias of the overall market momentum from the top down to the bottom, you can then start to go into those intraday levels and predict what may potentially be happening next. So I hope that has made a bit more sense, especially combining that with support and resistance, because I feel without understanding trends and without understanding how these correlate with support and resistance, you will not have a very easy time trading. Because once you know where the trend is going from the long term to the intraday, you are able to catch all kinds of different opportunities moving in line with the trend. And when you start to see confirmations on a daily, for example, or the 4 hour in this instance, of this low being broken, you then know once that low has been broken and the candle bodies break below, it's very likely price will then go down. Price will then come back up to test if this area is still invalidated, and if it is no longer strong enough to continue the buying pressure, the same way you used the support and resistance in the prior lesson, it's likely we will then continue a new trend. And then what you would expect from there onwards is a channel going downwards instead, which would obviously start to look something like that. We've got the wick there. If we plot that just roughly there, we plot this wick over here, you can now start to anticipate a potential bearish market may be coming into play. And for me personally, I do feel there could be a major turning point in the crypto market now. I've been saying this for a while. The bullish momentum gets going good. I personally think this is going back down to $10,000 and even below. Not because it's going to crash, but because this is a healthy market correction. And you must understand, in every market, there is going to be huge moves. If you were focusing on the 4 hour time frames, you would have seen these huge swings in the market. And if you didn't have the overall trend planned, you would have thought we were absolutely dying. You would have thought we were rocketing. And again, we are technically in temporarily bullish momentums. However, within those bullish channels, just to quickly show you, within these bullish channels you see here, this is a very rough drawing. This is more for visualization purposes. Just to show you how we're going up, we're going up, we're going up. We're going up, 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 up. However, if you're paying attention to these, you're not paying attention to the fact the overall trend is going downwards, as you can see here. The entire market was channeling downwards, but these are all simple retracements and corrections, combining this with, for example, support and resistance and zones. Again, just rough drawings just to show you. You can see this level here, crucial level of support, price was struggling to break. And if you draw the zone I told you for the range bound market, let's just say around here, the market was technically range bound because it wasn't breaking the support floor. It was channeling upwards at the same time, but it was also overall from the long term going downwards. So you could start to anticipate every time it goes higher, it's going to go lower. Every time it goes higher, it continues lower. And that's where you can start to identify lower high. Well, the highest high, lower high, lower high, lower high, lower high, lower high. So guys, I hope that's helped massively. Please do not forget to subscribe. Plenty more videos coming your way. And also, just do not be hesitant and do not hesitate to just continuously watch these videos over again. I'm trying to break this down as simplistic as possible and give you the insights into how I view the market, because you need to adapt a lot when it comes to cryptocurrency. So by viewing it in this particular manner, it will make life 100 times easier for you. So I hope it's helped, and I look forward to seeing you in the next lesson.